Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything Need to Know in 90 seconds at 9 o'clock, with news markets are a lot calmer today and more willing to invest in risk. First, the Bank of England has rushed in a £65 billion bond buying surge to be concentrated over the next 2 weeks to steady a British economy that has been lashed by some very bad recent public policy moves. The purchases will be carried out on whatever scale is necessary to affect this outcome, they said. It is a move that seems likely to have calmed markets globally. And it comes after both the US authorities and the IMF urged the British Central Bank to act decisively to halt the meltdown that those policy moves had initiated. In the US, mortgage applications resumed their decreasing trend last week after the unusual prior week interruption, and mortgage interest rates in America rose above 6.5% for their main 30-year benchmark rate, and that is about as high as it got in the real estate frenzy in the 2006 to 2008 period before the GFC. American pending home sales fell in August, falling 2% from July to be down a whopping 24% from August a year ago. This fall was the third in a row, and rising mortgage rates are getting the blame too. The US trade deficit rose in August from its usual seasonal pattern, even if the rise wasn't as much as expected. Those seasonal flows are making their inventory overhang worse. Wholesale inventories were up another 0.8% in August from July to be more than 25% higher than a year ago. Retail inventories are up more than 1.9% from July to be almost 22% higher than a year ago. Some of this will be inflation, but despite that, this inventory build is a serious overhang problem that could make any correction worse. In China, despite their weather and pandemic challenges, it looks like they will deliver a record grain harvest volumes this year. Some southern regions struggled, but others in the north had particularly good results. And Australian retail sales held up better than expected in August, rising 0.6% from July to an annualised rate of 7.2%. Year on year, there was up more than 19%, but a weak base affects that comparison. The August rise was also more than markets were expecting. And the US Treasury 10-year yield starts today at 3.73% and 24 basis points lower than this time yesterday, in a sharp reversal of recent trends. And the price of gold will open today at $1,660 an ounce. This is up $30 from this time yesterday. And oil prices start today $3.50 firmer at just under $81.50 a barrel in the US, while the international Brent price has risen to just over $87.50 a barrel. And the Kiwi dollar will open today at just over 57 US cents and recovering more than 3/4 cent from this time yesterday. Against the Australian dollar, well, it'll change at 87.6 Australian cents, and against the euro, also unchanged at 58.8 euro cents. That all means our trade-weighted index starts today at just on 67.6 and up 40 basis points in a day. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.